Hey, what's going on, everybody? We'll do a quick trade recap over the 0 DTE Iron Condor that we did yesterday in the day trading room and in the small account master. He did end up being a loser, but no big deal. It was a high probability trade, and yeah, it just didn't work out, and that's what happens with trading sometimes. But to understand the way I was viewing the market before, it does now, because if you see the market as it is now, you would think, well, that thesis didn't make sense. But as hindsight's always 2020. But if, like I said, if you didn't watch the plan of attack from yesterday, I'll go ahead and make it pop at the top of your screen right now. If you want to watch that, then come back and watch this so you can understand the full picture before it unfolded. All right, so as far as the trade goes, I did take a screenshot of it at time of entry. And so, long story short, I was expecting a choppy day because FOMC statement was coming out today, which the market really liked what JP said, which is great. So it should potentially be a relatively easy day tomorrow, but we'll see. So if I was expecting an inside or a choppy day, the expected move on SPX was 22 points. And there was also news coming out 30 minutes after the open, so I did not initiate this trade until 30 minutes after the open because I want to know where price was going to be. And you can see really didn't move after consumer confidence, I think, came out, if I remember correctly. And so I was all right, cool. So I went ahead and structured an Iron Condor that expired that day. And like I said, there was a 22-point move, so I actually went out 25 points, and that put the break-evens right outside this L1 and right above this H1. And there was also on the ES, there was a volume support down here as well. So I was expecting price to kind of stay there, and then there was also a bunch of moving averages. Like ES had also a skyline above it, so I was expecting moving averages to bounce around there. Things like that. But anyways, I was expecting sideways action. My break evens are outside the L1 and H1s, and so you see how I was there. But what unfolded? Well, I'm going to go ahead and pull up the chart. And here is yesterday. And you can see it did nothing but go up the whole time, which is fine. So actually, as it kept on grooving higher, I was there, I was watching it, and when it got around here, I was like, okay, so I closed the put side for 15 cents. Not one, sorry. Closed it for 15 cents. And I believe I got that position for, I have it written down. Let me check it out real fast. I got the put side for $1 something. Looking it up real quick. Okay, I got it for $1.41. That's what it was. So my put side got it for $1.41. I closed it for 15 cents. And so that means the put side I locked in 126 of profit as price kept on rallying up. Well, that left me with the call side. And I did end up closing it, I think about here is about the time frame I closed it, and I'll explain why. And this is a good concept as far as, or good talk as far as why you should be closing things. Yeah, I think it was about right here is where I closed it. And actually, I haven't even showed you yet, but this is the position I was in. So they were structured out. I was short the 40/50s and 39.90 put, or yeah, 39.90 puts, 40/50 calls. Made it 20 wide, and I got $4 of credit. So, and I ended up closing, like I said, the put side for 15, and then I held on to the call side for it looks like another hour, and then closed that side out for $2. And ultimately, I ended up losing only 74 cents on it total because I locked in 126 and made $2 on the other side and this side, and so on and so forth. So, anyways, lost 74 cents trying to bring in $4 of credit. That was a good little risk reward, if you ask me. But what ended up happening is, like I mentioned, as price kept on cruising higher, all right, so it gets to a point where you're like, oh man, how wrong am I? Because I believe the call side was maybe Delta 15 when I sold it. and we're all the way close to getting out the money. Good thing I did close it because look at that huge ramp up into the close. But I was going to talk about something as far as acknowledging when you are wrong. So first thing is the ticks. The ticks yesterday were pretty strong. So I stayed up here near 600 the whole time, and I watched. This is a 10 simple moving average on here, and you see how the average even stayed all the way up here 6. Like the ticks were so strong all day. Quick dip low and right back up to the highs. So basically, whenever it's not even dipping down here at all to on this side of the zero, okay, so that means it's strong ticks. The advanced decline did climb pretty much all day. So all this being said, is I was looking at this as a chance, or as that this is gonna be a strong trend day, and I may need to get out of the way. So yeah, like I was saying, ticks were overly strong. Advanced decline was really strong. It was just trekking higher. So, anyways, I admitted I was wrong and just locked it up. But that was the main reason to getting out is the ticks were overly strong, advanced decline is going up, and it was just cruising up all day. And it also got above the. Actually, I don't need that. I need this. So it actually got above the quant 4 hours as well, and the daily, obviously, quant level is up here because it did spike up. So all that being said, that was not the play of the day. The play should have been a put credit spread, but it's all right. Small loss, and that was it really. But that's all I have for you. If any part of this didn't make any sense, by all means, feel free to ask in the comment section. Also, let me know what you think about having the webcam on the screen or off the screen. Which do you like? Is it better that you see my face as I'm talking, or would you rather have my ugly mug off the screen? So, but yeah, let me know. And I hope you found this trade recap useful. And we'll see what happens tomorrow. Take care, everybody.